Good morning, everybody. It is Tuesday morning, the 6th of July. Hope everybody had a good 4th of July weekend. How was your 4th of July, Barry?
It was good. It was relaxing. And it was nice to have a 3 day break. So I
Yeah,
enjoyed it.
extra time to review your charts, right?
That's right.
This is the Plus3 stock and commodity forecast show. My name is Ben Maldonado. We're here with Barry Hedaraki, and we are going to take a 30-minute crazy tour through the markets and see what looks good, what's important, and what to expect for the coming week. I want to start, as always, with Bitcoin because I think it is a good proxy for the environment that we're in and the highest beta, most risky asset in terms of its price movement out there. And the grind continues. You can see here on the daily chart that this up and down choppiness is frustrating the bulls. It's frustrating the bears, exactly as we've been warning for the last 3-4 weeks that got to let this resolve before you try and take a position, because if you try and sell breakdowns, you're getting smoked when it comes back up. If you're trying to buy breakouts, you're getting smoked because it comes right back in. So the Chinese water torture continues in this triangle. Anything else you're seeing in Bitcoin, Barry?
Well, I think it just has to run out time here. So let it finish up. So far, there's no sign. So I think it's going to continue for a little bit longer. And just watching that lower line.
Yeah,
and I try not to be. It's better not to be a hero on a fourth wave chop type of action. You just have to wait it out till you see a sign of ending that, and I don't really see it yet. So
I couldn't agree more. This also, the frustration that sets in. We're getting close to the end of it when you don't even think about looking at it, because you're like, oh, it's just going to keep chopping. It's just going to keep chopping. So keep that in mind, with your own sort of psychology about it. When you start getting to the point where you're not even really looking at it because it's just in chop, there's no big deal, nothing's going on. That's the time you got to start looking, because they push you right to the end of your tolerance for this sort of thing. I also wanted to show the weekly on Bitcoin, just again give a different perspective, sort of a longer term perspective. Obviously, the huge move up we saw, and here we're coming back, and this is why this lower boundary here at the bottom of this current square is so important, because
exactly.
You're talking about major support from early this year in this 29,000-30,000 level. If we lose that, again, it's reasonable to think that 16,000, 15,000, 12,000 area is where price is going to, just on pure technicals, price is going to go. What's your comment on the weekly?
I think the 50% line right above the bottom. Nope, go a little higher right there. I think that's a key level, as well as the lower line. What's the number there? That's 36, right?
About 36.9, 37,000. Yep.
Right. So that on the top side, and
of course this 2930 area on the bottom.
Right. So that's how I'm looking at it, and that's a bracket. So within that, what I'm doing, how I look at that is I would look for the daily to give it some kind of a pattern that it's done. And it would still happen within that, but at least we know where the boundaries are, right?
Mm-hmm.
And you work it through there. So yeah.
The key strategy is to wait, patience, and wait for it to show its hand, because trying to jump in early is how you're going to get chopped up.
Yeah.
Let's kick it over to you, Barry, and go over your highlighted markets, and then we'll come back and I'll run over some of the commodities that look very interesting.
All right, let's do that.
Okay, I got your screen. There's our famous wedge.
All right, let's get through this. I was thinking, let's get through this before the market opens. a little late today. All right. Well, S&P, look, it's the same story. We've been watching this. We've been watching it climb up this line. And I would say we're pretty close to the target. There's a target I've been watching for months now, and that's coming off this low last year. And that, first target was at 90. We're looking at 90 to see if we got above that, which we did. Nice retest, and that was the next point to take off. Then we were watching the 180, which, we stalled for couple of weeks, got above, retested, and then we started again. So this is, you can see how each leg, each 90-degree square is taking longer and longer to get to the next level in degrees, right? Next 90-degree point. Mm-hmm. So this was steeper. This is a little bit less. And the next one, now we're taking almost 2.5 squares, right? A little bit over two squares to get up there. So momentum is slowing down. We're, as we're going higher. And so now we're at 270 degrees, which is a key level again. So all through, if you've been following us, what we do is we trade from level to level while considering other things, not just levels, but levels are the key indicator for direction and balance. And now that we've hit the 270 up here, it's time to pause and unload and lighten up and wait for the next phase, which would either it's going to have to consolidate here, or it's going to have to correct, or like we did the last couple of times, we'll just grind here for a bit, get on top of 270 and try to go higher. And if we get higher, next target's going to be around, well, that's interesting, 44 mm-hmm. Right in there. And if we get above that, I would say it's going to be all the way up to 4,700, which is the mind-boggling number to get to. So considering the fact that if we get above this 44, let's say 44.50 for to make it easier, then it would have to go much higher to terminate. Not, it doesn't have to do that, but that's theoretically that's how it normally performs, right? Based on the historical moves. So we're at one of those points. It's a time to pause, time to see what the next leg is. But there's definitely risk in being on the long side here at this point. And we've been watching looking at the weekly charts, and I've been talking about this, the very steep climb. And you can see we're at a level. We're not quite at 144 up from last year's low, but we're getting close. And so anywhere in here, we're starting to hit resistance. And given the steepness of the slope, it's a very the risk increases every week. And when these break, I was telling Ben the other day, it's just not going to climb it's not going to just crawl sideways. It's going to have some kind of a bigger reaction. So I would say now that we're getting close and the daily is hitting a target level, it's time to really kind of, and no, look at this. If you take that mid-move reaction low, we're up pretty close to 72 on a weekly. So that's significant, right? So we have that on weekly, and we have this 270 coming up on the daily. So I think we're in the target area, and it's time to really watch what the next move is. And probabilities are we're going to correct or consolidate below this level or right around this level. And the key, what we're looking for the next phase is something like that happened here last December or in May, where price would get above the square, consolidate a bit, and then start the move. That's enough coverage, right?
Yeah, and I think the key message that you're sending and that I'm trying to send to people regarding the stock market is it's not that it can't go higher, and odds are that it's going to go somewhat higher. It's just, is the risk reward profile favorable right now? And the answer for every person has to answer that question themselves. The answer for me, and I think, I won't speak for you, but in our discussions is what you said. You better know where the exits are if you're playing long right now, and the levels at which you need to take action, because the potential upside from here versus the downside is not in the most favorable position for longs.
Very good. Well said. And so that being the case, let's move on to bonds.
Mm-hmm.
And so basically charts are pretty much how we always leave them at the end of the show, and we just pick it up from there. And if you guys remember, the purple line, the 159 was the key level we were looking for price to come and test or to break out of. And we did that. And we are done with the retest. And now we're moving higher to test this high. So just like we talked about, we got the break. That was a level, came back to, and the way we know that was a level is, look, the retest held at the line. It could have held anywhere.
Mm-hmm.
And now we're, bonds are alongside here until it's not. And when is it until it's not? Well, it's reasonable to think that we'll go and test this high, this spike high. And the next level would be the half square. And that's around 164. All right. Anything to add to that, Ben?
One of the things I noticed when I was looking at reviewing the charts this weekend and looking at the 30-year, we've been consolidating inside of this 4-hour bar from the 2nd of July, and we're just getting above it today. But all the price action since then, as of last night, was inside that bar. So now that we're getting outside of there, we can actually tapi get some movement here and see what's going on.
Yeah, that was a nice tight inside bar there. I see what you're talking about, right?
Mm-hmm. Mm-hmm.
But the retest came really well. Look at that, big reverse, big bars, long bars. And then the next pullback, this one day was a very short bar, and they bought it again. So, the momentum is there, I think. And we'll just have to see how it plays out. But the targets are up above. And for now, if it's moving, let it move.
Right.
And let's take a quick look at the weekly bonds just to see where we are in the big picture. Again, so it's a little bit of a different picture here. We were more focused on the how the low came in, which was on the square 52, and it was 52-week leg down. And so now we got above that 52 square. And so that's okay, long as we're above that, and that level being, that 159 level, roughly. It's 60 here, but it would be 159 level. And, but I would say, you got to watch everything very carefully now. Everything's, when the market's at one of these points, you have to watch everything. And because some of these markets, depending on the cycle, they tend to push a little bit further than you would expect, even through these squares. All right. Let's move on to crude, one of our favorites, right? It's the easiest chart to work with for the last few weeks. And pretty much the same case. We're waiting for it to move higher. I think 79 is not a problem. I'll tell you, this 75 is a key level here. We really need to settle above it, right? As long as if you're struggling 74, 75, it's not on a strong, let's just say that's not a strong level to be below. 75 is the level we need to be above. So really watch that. And if we get above 75, then I would say, 80, 85 would be the next stop. And that's all I have for crude, just to keep it simple. And the weekly, weekly's just doing fine. It's a nice higher highs, higher lows. I would say it's a healthy trend. and climbing right up to 1 by 1.
Yeah, above 75, it's bullish.
Yeah, above 75 is bullish, no question about it. And
So
we'll see how it cycles out, but above 75, it can, the next levels are, it's reasonable to go $5, $6, $7 at a time. So let's just see how that works out. And next up, gold.
Yeah, gold's kicking up this morning.
And if you guys remember, we had this line drawn in, and you can see how gold came in right to that line. Ideally, the quarter line we were talking about, it pushed a little below, but it's holding right above this, consolidation. This is all textbook stuff, right? Textbook pullback. And so the next upside target here would be around 1850. So trade the upside. Well, we're looking to trade the upside and up until 1850. That's my
Hey,
take.
Barry, one of the things on gold, I think, is a good example to talk about with every market and trading. You mentioned it in passing, but I think it's really critical to talk about this for a second, spend a few minutes on it, how it took out that low marginally and then went back the other way. Because we see that behavior in every single market.
Mm-hmm.
Can you talk about that, the false break phenomenon? Because I think once people grasp the false break thing, it helps clear a lot of things up when you're looking at the markets and trading.
Well, I think we covered it one of the earlier shows. Well, false breaks are basically where price makes a high, significant high, and then a few bars later, we'll have another bar that would quickly go into new highs and reverse. Right. And it happened at the high here. You can see the high came in on May 26th. And then on June 1st, we made a slightly higher high inside day. That's a dead giveaway, right? Next day reversed, and that was it. A little pullback and the correction started. And to the downside, the same thing happened. We made a low, technically exactly where it should be, meaning if you're using these squares, it was a quarter square. And then a few days later, it came down and just broke enough to sort of flush everybody out, and very strong move up off of there. So I would say this new leg has some steam behind it. So just looking for it to go up and test the 1850 area.
Yeah, this fall. Yeah, absolutely. And this false break phenomenon is something that, Barry and I have been talking about in looking at, 1 minute you could say, oh, well, it's just noise. Well, they do this on every time frame. They even do it on the monthlies. And in doing our work and looking at the monthlies and the commodities, almost every single one of them prior to this whole bull run had a clean out move on a monthly basis to take out the lows, and then they started the bull market. Mm-hmm. So if you can find it and you can train your eye to look for it, it can give you a very strong clue to where a leg is going. One leg is ending and a new leg is started.
That's right. That's very good. Especially if the first leg is on some kind of support or resistance. Eh? So,
yeah.
All right. Here's the weekly gold. Again, weekly came into fairly decent support, rallied, and is the higher low. And it's reasonable to expect that it's going to go up and test the old high, which is about 1920. All right. I just noticed time is clicking away. So let's take a quick look at the dollar. And we have our key level here, 91.42 is where we had drawn it. And, well, our approach is always the same, right? We have levels. We look for it to penetrate the level or not. And if it does penetrate, we look for it to retest it and move higher. And it's a simplistic way to look at things. But if you follow this, you'll see how the retests are pretty much exactly on the line. And that means a lot levels are good. And naturally, that's why we trust them. And here we can see the dollar came back. You broke out in a grand way, right? And then it came back to retest it, held a retest, and then now we're moving higher. So for now, the dollar is strong, and the upside being at least a test of the old high here, around 93.40. And if we were to go up and test the square that we came off of the old high, it would be around 94. Anything you want to add to the dollar?
Just like we've been saying every week, the dollar is sort of the key to almost all the markets right now. So you get the dollar right, I think you can get almost any market right. So that's why we watch the dollar. That's why we're focused on its bullish or bearish structure, because all other markets are keying off it right now.
And speaking of false breaks, let me just zoom in a little bit. You can see it even happened here, right? We put in a little bit of a low here, and then one day spiked down and reversed right there on May 25th. And again here, low came in, looked like in a big, huge day up, came back,
just undercut it,
and then moved higher. So yeah, they're everywhere once you start looking. And the euro, just to finish up on the currencies. Ever since we broke this level up at the 21.42, that was our level the euro would have to hold in order to go higher. Well, it's been going lower. It's been weak, and it took out the 50% line that we watch on all squares. Went down in a hard way, and it's still lower. So I would say a test of the old lows are in the picture, and that's around 170. So it's basically inverse of the dollar. So we'll see how that goes. Anything you want to add to that, Ben? Or
no, I think that's a good synopsis of the dollar. Good ranges, good levels to watch for action.
Mm-hmm. All right. Let me hand it over to you then.
Okay. So we're going to take a look at a few of the commodity markets that stood out in my weekly scans. And one of them is silver. This is the daily on silver. You can see we've been essentially in a sideways correction for a year now. The high was last August. We're now into July. And we have the interesting thing here was we have a series of higher lows. Another one being put in last week. The level that we're grappling with right now is this, 2675 area. We can sit on top of that. It can give us the ability to launch and maybe the next leg higher here. But this sort of series of higher lows is starting to create an ascent, if you will. If you look, that's a little higher. You say, okay, draw a line here, draw a line here, draw a line there. They're getting steeper. And that means the momentum is starting to pick up. I also wanted to show you some of the higher time frames to give you a bigger perspective on where we are. There's a weekly. And the best one to look at, though, is the monthly. Here's your clean out low on support, but took out the lows from 6 years back, 7 years back.
False break.
A false break at the low on the half square. We get a nice push up, and look at this basically big, huge sort of diamond / triangle type pattern. But you can see the lows every time we come down, the buyers are stepping up at a higher spot. That's a sign of accumulation. Once we break out of this, 28, 29 level, I think we're off to the races. So that's what's building in silver right now. Yeah, this is 29.16. The first resistance will be up in almost 38. So silver is looking very interesting to me from that standpoint. Another one right now, my favorite, is natural gas. This is the daily on natural gas. What do you see? You see a low here on support, last year at the depths of the COVID crisis and the COVID lows. And then again, a series of higher highs and higher lows. This past week, we broke out, took out those highs from last October. Now we're sort of chopping in here, but up above an important level on the half square. Again, let's look at the higher time frames to give you a bigger perspective picture. Here's your weekly. See on the weekly, the low, how they took out that previous low from 2016, 4 years later, took it out, strong reversal, and now beginning to start another leg up after this consolidation on the weekly. On a monthly basis, just getting started. Again, look at the clean out low here. There was a low, there was a low. So this, if things go as planned, and if we can keep getting above resistance, setting higher lows with higher highs, I don't see any reason why we can't make a big move in natural gas on a big picture, long-term base here. But that's gas. Any comments on gas or silver, Barry?
Well, gas, I think you're pretty much on that, and I would say what's the target on that first square, completion of that first square up?
It's about $6, $570, I think it is, 580.
Okay, so I think that's definitely a reasonable target now that we're slowly starting to take out the 50% line.
Mm-hmm.
Yeah, I think it looks good. Watch the daily and get to work.
Yep. Here's another one we talked about last week that I like. That looks like it's waking up, and that's sugar. Here's a daily on sugar. Again, battling at this half square here. You can see these bars, they go above, they come below, they go above, they come below. But somebody wants it here. They're not letting it get below here for now, which fits perfectly with the structure of the previous highs in early June. So sugar also looks like it's ready to go. Let's look at the weekly, give you a bigger picture perspective. What do we have at the low? Big clean out bar. Took out the lows, strong reversal. Higher lows, higher highs, settling above the full square on the weekly.
Mm-hmm.
And the monthly, for the biggest picture view, broke out, came back and retested. Now we're heading next leg up. Again, sugar is currently at 1829, 2350, 2340 area. Once we settle above this half square, which is about 1860, you're looking at 23, 24 as the next target. So sugar looks good. Last one I want to review is cotton. Now you could say, oh my God, look at the move that's had already. This is a daily since the COVID lows in last March, April. But what I'm more interested in is we made this spike high in early February, pulled back, and now we've been winding up in this triangle for almost 6 months now. But we're holding above these highs we made early in the year. Again, this pattern of higher lows. We got lower highs, so that tells you a triangle, but we broke out. We had a breakout on the move last night. And I'll show you in the bigger picture why this thing looks like it's ready to get going. Here's your weekly. Look at how we're respecting this line. Isn't that a good line there, Barry?
That's an excellent line.
Yeah, I mean, that's the kind you look for, right? But again, the key thing is, though, we had this clean out low, big move up. We've been correcting and going sideways for about 6, 7 months. And now we're getting this pattern of higher lows, higher lows, higher lows. That means accumulation. I think cotton is ready to get moving. Here's the monthly. Look at this big triangle on the monthly. And we're settled above a half square. So odds favor that it's going to resolve to the upside. If it does, I mean, cotton's currently at about 88, the target, 104, 105, first target. I mean, if it really gets going, we can get up in here, but we know that settling above that half square, odds favor that this is where we're going next.
Exactly. And you can see that little triangle is squeezing in some kind of a termination here soon. So
that's right. So it's telling us that a move is coming. And that's why we highlight, that's what we try to do each week, is highlight different markets that are ready to move, or the major markets that people trade. And so for the week, I think, keep your head up, keep watching. I know we've been saying it, but we're in this major cyclical shift. And part of that, what the charts are telling us, not only is there vulnerability in the equity markets, but the consolidations that we've been seeing in a lot of different markets, whether it's, silver, gold, cotton, sugar, natural gas, are getting close to resolving. So anything else you have that you're watching this week where you want to focus?
Just the ones we talked about, crude and the S&P, pretty much highlights it, I think, and natural gas for sure.
Excellent. Well, I hope everybody has a great week. We will be back with you again next week with a review and a look ahead, and good trading this week. And hopefully the account is green. That's the goal every week. Make it green. Take care.
All right. Have a great week, everybody.
Bye.